In this example, we are looking at the preparation of a single-step income statement. A single-step income statement gets its name because it's basically one step in coming up with our final net income. You take your total of all of your revenues minus the total of all of your costs and expenses to arrive at net income. So here we're going to look at our revenues. We have two revenues. Our first revenue is net sales, and our net sales has a balance of $4,800. Then the information above also says we have interest income. Interest income is the income that we earn, or interest we earn based off of investments, and our interest income is $180. So we add that together and we get total revenue of $4,980. Then we have our cost and expenses. So our costs and expenses are going to consist of cost of goods sold, which is an expense account, general expenses, and selling expenses. So we'll first look at cost of goods sold, and cost of goods sold has $1,680. And then after cost of goods sold, we will choose our selling expenses, and our selling expenses have a balance of $1,110. And then our next expense will be our general expenses, which are $900. And then our last one would be interest expense. Interest expense is a cost of borrowing money. So our interest expense is $420. So then I will add up my total expenses, which is $4,110. So then I take my total revenue minus my total expenses, and it becomes a net income because my revenue is greater than my expenses. So I take 4,980 minus 4,110, and I have a net income of $870. So again, this is called a single-step income statement because you have all your revenues at top and all your costs and expenses at the bottom, and it just takes one final calculation to calculate our net income.